Hey everyone, welcome to another episode of Visor Visionaries. I'm your host, Litan Yahav, and we're continuing to dive in to the challenges of managing complex wealth with the nation's leading wealth managers. And today I'm thrilled to host our guest, Michael Garry. Michael is the founder and CEO of Yardi Wealth Management, which is a fee-only RIA. He has more than 20 years of experience in this field. He's also a CFP, an AIF, a JD, an MBA, a lot of those credentials. And he's also a thought leader in the financial planning and estate strategy space. So welcome, Michael. It's really great to have you. Thank you for joining us.
Oh, thanks for having me. Really appreciate it.
I want to dive right into it and just like start asking questions about how you see this and just like have a conversation around, managing high net worth individuals' portfolios tends to be more complex than, the more mass market. What do you think is the toughest challenge? Like assuming, all because of let me reframe that. I think one of the reasons the way I see it, it's complex is because the more wealth you have, the more you start to dive into other alternative investments in privates, which, increases the complexity exponentially. And I'm interested, like, first of all, do you see that as well? And if you do, how do you guys manage the challenge, or what's the toughest challenge around that?
Yeah, so I agree. I do see that. I see that once you go up the wealth ladder, people get more and more complex strategies, more alternatives. And I think that the hard thing is keeping the alternatives for clients who actually can really have them. Right? Because a lot of alternative strategies have high minimums, they have lockup periods, they make redemptions kind of hard. And so you really do need to be a high net worth individual. But a lot of times they're marketed and pitched to clients of ours wind up having some as they transfer in where I don't really think it was a suitable investment. Like somebody with who just barely meets the accredited investor standard probably shouldn't have 20% of their net worth locked up in an apartment complex, a couple of apartment complexes in San Francisco or whatever. So I think it's like having the right products for the right clients. And I think a lot of times advisors just like, if you're a hammer, everything is a nail. Like, oh, I love this product. I'm going to pitch it to everybody. And like, okay, so maybe it's a good product for your $15 million net worth client, but maybe not for your $2 or $3 million net worth client, or maybe somebody needs to be richer than that. So then the other hard thing is like explaining all those things to clients, right? And saying like, if you want to use this product, here are the potential reasons why, but here are reasons why you might not want to. And so we don't use a lot at all. It's really very limited in very, very specific situations. Yeah.
What do you do with clients who you're onboarding who have that type of exposure? Do you feel like that's a challenge to sort of explain like in a nice way? Listen, I know you think you made the best decisions, but that 20% you put into a syndication, find a way to get you out of that, or at least not increase your exposure. Like, is that a conversation that's hard to handle with the
Yeah.
client?
Yeah, right. Because if somebody's making the decision to come to work with you, you don't want to like second guess their prior decisions, right? That oh yeah, you're not too good at these financial decisions, but yeah, come here, sign with us. But yeah, it is a difficult conversation, and I think what we try to do is have it in the educational part. And so we'll try to, as we go, we start everything with planning, right? So the big long time conversations, first couple meetings, talking about a wide range of issues and trying to feel them out and see like what's important to them, what's not important to them, how they react to different things, and do a lot of education, right, around our philosophy and how we do things. And yeah, when you see something that clearly was not a great idea, it's a tactful conversation, right? You try to be nice and say, oh, yeah, well, I could see why, your advisor thought that might be a good idea, but, we wouldn't have made that same decision. Usually we'll try to explain some of the reasons why, like that the client wouldn't know, right? So that it wasn't the client that made the bad decision, but maybe the advisor used a product that maybe wasn't a perfect fit. And we'll say like we see that all the time. Like if you thought it was a perfect fit, you wouldn't be talking to us now, right? Like it's not the only issue with their previous advisor. But yeah, it's a hard conversation.
I'm curious. I'd like to stick on that onboarding new client step because I think it's really interesting. Because you mentioned a few points there. When you're talking with a prospect or a new client, I'm assuming most of them come from referrals, right? Or are you guys doing also like online marketing and stuff like that?
Yeah, so we get a good amount from referrals, but we have a pretty good presence online. I got SEO for Dummies 15 years ago from the local library, and we make a lot of content, and we have a sign on the main street in our little town. So like more than
Okay.
half of our prospects are not from referrals.
Got it. All
So
right. So, first of all, it's really smart. You're like ahead of the curve when everyone's like thinking about SEO past couple of years. I think so that was a smart move. So you have a client who got to you either through a referral or through your organic reach, which is pretty amazing. Because I think the main driver of most firms is referrals and not organic. And I think that
right.
you managed to establish that. Like, kudos to you. That's a really good job. Now, you're right. So you have people come in, you have this conversation, you try to overcome that where you see some like glitches in their portfolio around like those privates and stuff. How do you navigate when a client has assets with a different advisor and they don't want to move everything yet? Like they want to, I assume many of them want to try with, let's take this subset of my portfolio. You guys manage it for a while. We'll do both. How often does that happen?
So that, as far as I know, no one has ever told me that has happened. Now, we've had situations where clients manage their own investments and they don't bring over everything right at once, and sometimes for a long time. But I don't know of any situations where they've maintained a prior advisor relationship. I'm sure some do, but they have not.
Interesting, interesting. Because I guess maybe in the higher net worth brackets, you'll see someone has a Goldman account and someone has a Morgan account and someone has, another advisor maybe. So maybe at that those levels there is more diversification.
Right. Most of the clients we deal with have less than $10 million.
And so you bring them on and then, they're hooked on your model and they love your offering and they start to transition, right? Onto onboarding their finances to you. What do you feel is like the hardest part of that process? And how do you guys solve it?
Yeah, that's a good question. I think that there are a couple of hard parts. One is keeping everything moving, right? Like, and making sure that the client knows that it is going to take some time, that we have to rely on the ACAT system or whatever the way the transfer is taking place, and it's not going to just happen overnight. So we try to make sure the client knows to have some patience. We try to set expectations that of what the process is. We have the way we have meetings scheduled. We have like the plan delivery and where they sign on with the investment policy that we're going to use. And then at that point is when like the transfers have started and come on board. And yeah, it's hard. I wish that it didn't take so long. You'd think in 2025, if somebody decides they want to move an account, it shouldn't take upwards of a month sometimes, but sometimes it does. We tell clients be patient. They'll eventually release the money. Yeah, it's funny. Like there's a lot of situations like 401ks. Why are they still sending rollover checks in the mail to the client that the client then has to give to us for us to then mail to the IRA? Like, why does that take three mailings instead of an electronic transfer?
That's crazy.
Hey,
Yeah.
yeah, there's an article a month ago in the paper where a guy got his rollover checks and then he mailed them to the new place and they got stolen. Somebody cashed $114,000 of his rollover. Like, why is that a paper check that's going in the mail two times? Right? Like that should be electronic.
Right. Okay.
Sorry about getting on that tangent.
That's really, yeah, no, I mean, I love it. That's my question was a challenge, right? And so it's interesting that the main challenge in onboarding that you guys are saying is transferring over like those custodian accounts to your management because everything else probably is more simple, right? I assume like the financial planning part of it and the tax planning, estate planning, are those are things you guys do in-house? Is that part of your value proposition during the onboarding process?
Yeah, we do all that stuff. And I'm actually, in terms of the estate planning, I'm a lawyer licensed in PA in New Jersey, and I do estate planning for a good deal of our ongoing clients. I don't do it for like anybody else, like in the neighborhood, but I will do that as a separate engagement for our ongoing advisory clients. But yeah, like that ACAT system, that's the same as when I started at Maryland 98. Like it doesn't seem any faster,
Wow.
right? Like, why is that 27 years later still moving at the speed of paper?
Yeah. Yeah. There's a company of friends of mine called Pantera. Have you heard of
Oh
Pantera?
yeah, yep, yeah.
And
We
I
use
think, yeah. But isn't that trying to overcome that problem?
well. So that, with Pantera, at least as far as we use it, we can manage someone's 401k even if they are still working and we can see their account. but I don't know of maybe that's something they're working on that we're not aware of yet.
All right. So you go through that hurdle of onboarding a new client, right? You transfer their accounts finally to your management. And now the ongoing relationship with that client. How does it look? Like how do you guys structure that? What's your SOP cadence of how do you guys look at that whole the ongoing management of a client?
Sure, sure. So the first thing we'll do, the first thing after everything is set up is we have a 45-day check-in meeting. And so if they're close, they can come in the office. If not, we could do a Zoom or Teams. In that 45-day meeting, we would just want to make sure that they can log in, they could see their accounts, everything is right in the system, everything is what they expected, right? So like the accounts are set up like they thought they would be, that there's not anything wrong, right? Because if we're doing something that's different than what they expect, we want to catch that, right? You want to nip that in the bud. And so we have that meeting, so it's after having like the four or so meetings not long before that, I think sometimes it feels like overkill to the client, but even if it's like a 15, 20-minute check-in, I just want to make sure that things are going right. And then after that, first year, we'll typically set up a 6-month meeting, like on a 6-month schedule. And then once we get to the second meeting after that, it's a year, then we ask the client, like, would you want to be annual or do you want to stay on a 6-month schedule or do you want to go to annual? And I'd say most would do annual. And then, like what I say is, it really depends on them. Like, because some people find dealing with these financial things stressful and they don't love it. And I don't want to add stress to them. I don't want to have to subpoena them to get them in the office, but I would like to see them. But we leave it to them to how often we'll have the meetings. But then, apart from that, there's always emails, phone calls. Like there's pretty ongoing communication with most of the engaged clients. Like the clients who want to be involved and want to stay in touch should find it easy to. We're also active and present on all the socials, and a lot of clients follow those. We send out pretty frequent emails to clients to receive them. So we try to be out there so that they know we're here, right? So they don't feel like they made a decision, they never hear from us anymore. In terms of the management, the account, other than like the interactions with the clients, we use Tamarack for our portfolio trading and rebalancing, Money Guide Pro for financial planning, Holistic Planner for tax planning. The estate planning doesn't get updated nearly as often as those other things do. And those we stay on top. We update the Money Guide Pro when we see people. In terms of portfolios, everybody's got an investment policy statement. So everybody's got a model that they follow. We do some trading because people become out of tolerance. We look at the screen for tax loss harvesting all the time. And there's other reasons. Typically, a lot of clients are at the age where they're taking distributions, right? So everybody's account, like we use the software every day just to check to make sure like nothing like has to be done because of an intolerance or a cash need. But then, yeah, it's good. Like the technology is good that it allows us to handle a lot. Say compared to like 20 years ago.
Right.
It's nice. Yeah.
But what do you do with so I that makes a lot of sense, especially in the liquid asset classes, public markets, cash. Although I also have a question on cash, but I'll come back to that. What do you do with sort of the private side of the market, the illiquid side of the market? Is that also sort of if your client says, "Hey, listen, a buddy of mine has a industrial complex he's raising for in Florida. Can you take a look at that?" Is that all something that you guys deal with, or is that, listen, it's out of my ballpark, you make your own decision? Like, what do you guys do in those types of situations?
Yeah, no, we have talked to people a few times about situations like that. There's somebody who wanted to do something in Times Square a year or two ago, like a buddy of his, and basically once he got all the offering literature, like, we went down through it. He decided not to buy it, but in a situation like that, I just really make sure he understood what the deal was, what I perceived to be the pros and cons, and then we talked through it. He asked some questions, and then he made a decision not to invest. I probably agreed with his decision. He still had 4 kids to put through college. I thought like that was kind of a lot to lock up for that. And that's for that client in that situation.
But for clients who are already invested in those types of deals, do you guys do the ongoing management or tracking of them? Those are
Yeah, we don't really have a lot of the alternatives. Like I've never been a giant fan because I think that they are for higher net worth people than our typical clients. Like I said, most of our clients are not worth $10 million. And so yeah, I think most of the accredited investor standards probably should have been raised for inflation from like a million
yes,
years ago. Because I
that's
like the
true.
same numbers when I was in law school in the 90s, like that's that's not a
Yeah.
well.
Yeah, it's funny. You look at, the 300,000 as a join or $1 million net worth and or liquid assets. Yeah, it's kind of outdated. All right, cool. So you have that now, you manage those portfolios, you have these ongoing communications, like, and you interact with your clients at the beginning, more often, and then as you go down the road, it's less often. I'm gonna go back to one of the questions I want to ask on that, on the cash management side of the things. Not about, bill pay and stuff like that. That's like MFO stuff. Expense management, budgeting. Is that also because if you do the estate plan or financial planning, you also probably help them with the, all right, you're spent. Let's go over your review your past quarter and see what you guys have spent on.
Right.
Do you do
Sure.
that type of stuff, or is it only if there's a flag that comes on?
Yeah, so I would say, we talk to everybody about it, right? Because we want to know, we need to know if they are what their retirement readiness looks like, right? And so, and most of our clients are mid 40s and older, right? And so it's on their radar, or it should be on their radar. And so most of them have a pretty good idea of what their monthly spending is, and most don't seem to have an issue. But there are times when, we have to have kind of a frank discussion about, like you don't want to, you never judgmental, right? Because people are living their best lives. And, sometimes you need to give a reality check on what they can actually afford. And then like I wouldn't never get into like what should be cut, but if someone's spending 25,000 a month and they really can only afford to spend 20, I bring that to their attention and we talk about it. And like let them look at the numbers, and if it's a couple, of course, it's one's like, well, you see too many plays, you play too much golf, like whatever it is, like that's something for them to figure out. But I have to give them the information, and then if they don't make any kind of corrections, like that conversation gets harder and harder because I don't want to be in a position where they're 80 years old and they're running out of money because they've been spending too much for 40 years. But that's hard because it's easy for an outsider sometimes to see what somebody else is spending money on and say, oh, like, well, that's wrong. But you don't know like what their life has been. And maybe that thing that they do that seems so irrational to you could make perfect sense to them. And it might be okay for them to do something. They just have to cut something else out. So I think it leads to a lot of conversations about like what's really important, what's driving that, and then maybe you could get back to something, either that or something else that can be reduced to, or be okay with working a few more years or having a little bit less spending in retirement, right? There's all kinds of second, third, fourth choices, other things that you could do to correct the situation.
Yeah.
How's that for a roundabout answer?
No, but it may I like it. It's complicated. It's a complicated question. Like these aren't like black and white
Right.
questions where you can just answer yes or no, right? So I appreciate it. So now about the future. Okay, so with all AI, and I mean, I'm not going to ask like, what you use today because you already went over sort of the tech stack. But like if you look at the next 5 years and take into account a lot of aspects, not just AI, but like generally speaking, there's a lot of things happening from a macroeconomic standpoint, from a demographic standpoint, from a political standpoint. There's so many things happening, and then adding on top of that the whole AI revolution that's happening simultaneously. How do you see the future of wealth management evolve over the next 5 years? Like we don't have like that, crystal ball to look into, but like
Right.
if you were to try and imagine 5 years from now, and I assume you do this with your business, right? Like how are we going to evolve? What do you think the future of wealth management looks like?
I would like to think, and I'm hoping that the tech stack and AI can help make all of that run so much better together. That AI would be able to alert us to things that maybe we wouldn't see manually. That we don't have to I don't know. I'm hoping that it does a good job of like tying things together. We use it in some things, like we use Jump to record meetings, which you saw earlier in this conversation. And it's good, but I think there's some other things out there that are doing different things. I think what will continue to accelerate is the move from financial advisor of being like maybe a stock jockey 30 years ago and a mutual fund picker 20 years ago to really like be able to give really good financial tax and estate advice on an ongoing basis to a good number of clients, right? Like, when I worked at Merrill, I spent a lot of time like looking at, mutual fund reports or Morningstar or things like that. And it really is about like investing, and people want to see like quarterly meetings about investments. When people come in, like the investments are now like the tool. It's like it's just what's there. We don't have those meetings about that. It's about like what are they doing in their lives? What plans do they have? And the question like can the investment sustain that? And so I hope, right, that the financial advisor role or position becomes more and more of a profession, and a trusted advisor, and not like a salesperson or worse that we've been sometimes now, but way more in the past. And I'm hoping that that continues. And I think that the tools seem to be getting better and better, and maybe even that will accelerate with as they've gotten better and with the AI.
Yeah, I tend to agree, and I think that I like to look at the world as we have human agents or human advisors, and we have AI agents and AI advisors, and they're going to work together. Just like
Hmm.
you hire a junior advisor who sit together with, a senior advisor who work together, like different positions, doing different stuff, empowering themselves with, other AI powerful platforms. Yeah, with full
Right.
disclosure, that's like something we're building, right? We're advisor as well. And last question, what's one strategy that you guys at Yardley Wealth offer your clients, which has been a game changer? It doesn't need, not like when I say strategy in wealth management, not necessarily a financial strategy, like generally speaking as a business.
I think that the biggest thing in the last 5 years or so has been the evolution of using tax planning for all of our engaged clients. Because I think, before Plan made that so easy to do, it was hard to try to do tax planning and projections. You would need to have pretty expensive software, or you would try to have to like kind of guess. And now it makes it really easy to do. And I think for a lot of our clients in their 60s and early 70s, mostly 60s though, where you have a choice of whether you're a take from taxable or IRA, or where you're going to give money away from for your taxable or your IRA, whether you should do Roth conversions. All of those things are good tax planning questions that would have been much harder for us to do 10 years ago. And I think the fact that we do that with all the clients that we could get to come in every year and upload a tax return, I think it makes a big difference. And I know that sounds about the most boring answer you could ever have, but it makes a difference of like tens of thousands of dollars in a lot of clients' cases, like every year. And you multiply that over time, and their kids are going to be really glad that we did that.
Yeah, I mean, I don't think anyone can downplay taxes, tax advice, tax planning. I mean, it's crazy how people make decisions, financial decisions,
Mhm.
investment decisions, decisions to work with a wealth manager or not, just based on that huge Pandora's box, which is called taxes. And I think that is, I mean, it sounds like a really great edge and definitely a game changer for a lot of high net worth clients specifically, but clients in general. I really appreciate that. That's great stuff. Listen, Michael, we're coming up to time here. This has been an incredible discussion. I really appreciate it. Thank you for sharing all those insights. And if anyone wants to connect with you, other than going to Yardley Wealth Management, we're going to share your email in the show notes. And I don't know, I assume if you're on social media, you're also probably pretty active there, LinkedIn,
Yeah.
Instagram, Twitter,
Well,
whatever.
yeah. No, first, I want to say these have been great questions. I really appreciate it. It's a really thoughtful podcast. A lot of times I'll go on these shows and I don't know that the person knows anything. You are obviously very well informed about this space and have asked great questions, and I really appreciate it. It's been a really good taste of. good use of my time this afternoon.
I really appreciate that. Thank you so much. And thank you all for joining. See you next time.